So how exactly do I pick my strike prices? Now, I do this in two different ways. First is technical analysis. You got to look at the charts and look for support and resistance. And then there's some of the statistics that you have of the probabilities of what can happen in Robinhood itself. So first we'll look at the chart. Now, when it comes to charting, you would have to research this. There are tons of videos on YouTube on how to chart, what it means, what it is to chart, what everything means, what all the indications are, what the indicators are, what the candles mean, and all that stuff. I don't have time to go over that in one video, but I'm just going to show you the basics. So this is what a chart will look like. This is TradingView. TradingView is a free platform you can use to look at charts. You can also use Yahoo Finance, and I'll show you that one later on also. But this is what I look for. First off, I look for support and resistance. Now, this is a normal candle view right here of a chart. With the green candles means it's going up. Obviously, red candles means we're going down. We're bearish. And if you don't know those terms, bullish means we're going up. Bearish means we're going down. So what I like to do is I like to switch to Hakanashi. It's a Japanese candlestick where it kind of gets rid of all the noise and gives you the momentum versus actual candles. As you can see how it just changed. And what this does, it tells you more of where the market has been, right? So as you can tell, I drew a box here where all these candles stopped, right? It stops, it stops, it stops, it stops. And even here, it was resistance. So at one point, it was resistance, and then it went up, came back down, it was support. Then it went up, came back down again, support. And then went up, came back down, support. It didn't go past that. Now, this one time it did go past and it went down a little lower. As you can see, it bounced off that pink line. Now, that's more of a macro picture, right? That's when you look on the weekly. So these are daily candles, by the way. Every candle is 1 day. Again, do some research on candlesticks and charting, and you'll learn a little more about this. But support and resistance is pretty much where it stops at the bottom or stops at the top, right? And you want to find a place where it does that often. So in this box right here, it did it a lot, as you can tell. There's a lot of candles in there that stopped there. Or, as in this example right here, let me zoom in. As you can see, it stopped there on the way up and then came back down. Stopped there on the way up and then came back down, right? Now, the box under that, which is this box. Let me zoom out. Hold on. This box right here. This is just more of a macro view, like macro view. So if you look, if this box goes all the way back to the resistance of this time, which was June of 2021, right? And this is January and February 2021. So this is all 2021. So the stock was resisted there. So that's an important point. That's you know, if you're going up, you might stop there and then go back down. And if you're coming down, you might stop there and then go back up. As we can see here, it kind of wicked it right here. It went a little lower and hit the pink line, which I'll show you what that pink line is in a minute. But it went down and then it went back up, right? So it kind of shows you that this actually works. Support and resistance works. So the pink line is just on the macro view. If I switch to the weekly time frame, which means each candle is the week, you can see that this has been the pattern for SoFi from the existence, right? So as you can see, it hits the bottom of the train of this channel, and then it came up, came back down, then it came up, got rejected up here, right? This is the resistance, and then it came back down. This is the support, and then it went back up. That's resistance, came back down, almost at the support, and now we actually broke out of this channel, right? Right here, we broke out of the channel. And then normally what happens in trading, and you'll learn this when you're charting and you learn about charts, it'll always come back to retest. So this is a support and a resistance line, right, that we broke out of. It's always going to come back and test it. Well, that's what it did on that candle that I was showing you. As you can see, right on the money. So if you don't think this works, right on the money, it stopped right there, right? Tested it, and then now we're working on this resistance right here, which is this box. this support, I should say, not resistance. We got above that support, and now we're using that as support, and hopefully we're going to take off and go a little higher, because that's what it looks like it's going to do. Let's go back to the daily. So basically what you want to do is everywhere you see support, like at this box, you should be wanting to get puts in this area. This is where you want to buy the stock, right? So you try to find puts in that area. So anytime we get close to that, which is 26.40 to 25.64. So you can buy puts at $26 or $25. And when you're selling covered calls, means you already own the stock. So let's say you bought the stock down here, right, at $22. You want to put a call somewhere over here at 25 or up here at 26, because you can see that it got resisted there and then came back down, right? Unless, of course, you want to sell the stock. If you want to get rid of them, then you want to sell it somewhere over here where chances are it's going to hit and you're going to end up selling your stocks. But if you just want to collect premium and then continue doing this again, then you want to put your strike price somewhere around here. There's another factor, and that's over on the Robinhood platform. So make sure you follow and like this video so that you can also catch the next one on showing you the other factor, which is the statistics that Robinhood gives you that actually help you pick where your strike price should be, and expiration dates and all that good stuff. And I almost forgot, if you want to add more to your confluence, what they call, right? It's called confluence. On, let's say you found a good support or resistance area, but you also want a little more to feel a little more confident. There's something called the RSI, which is what you see down here, this right here. And this just tells you if a stock has been overbought or oversold. Now, when a stock is oversold, like all the way down here, then that's a good time to sell puts, right? Especially if it's oversold and at a resistance, as you can see right here. Let's zoom in here so you can see it. It was all the way down here at oversold. As you see, it gives you a number on the right-hand side of 10. So this was oversold. It got all the way down here. It always comes back up. As you can see, when it was down here, right? When it was down here, it was oversold. And if you look up here, let's go back to the top. Right here, we also hit this support. So we're at support. We were oversold. That would have been a good time to sell puts, right? Because as you can see, what happened after, it went all the way up to $29. And remember what I was saying in one of my past videos, if you would have sold a put here and the next couple of days it went all the way up over here, way before your expiration, you would have made a lot of your money. And you couldn't close that. You could have closed that early. You probably would have made like 80% profit in like 3 days, even though your contract was for 30 days. And then you could have closed it, because it doesn't make sense to wait another 3.5 weeks for $20 of profit when you already made 80% of it, right? So you might as well just take all of it. So that's another factor that you can add.